Good morning, everyone. Welcome back to another video. This video, we're going to discuss the outlook for Nifty right before the FOMC meet today. So let me just check the economic calendar. Yeah, so tonight, 11:30 p.m., you can see there's a Fed rate decision. Second, let me just. Yeah. This is a red folder news, or you can call it a high impact news. All right. So let's see what Nifty is doing for the entire week. Right now, Nifty has been going completely sideways, and this is a very good setup for those who are holding some shorts in the options. Right, they have easily managed to capture some decay. What is the possibility? What can the market do? Looking at the higher time frame first, let's go to a 1 hour chart. It's very clear that there are only two possibilities right now. Market is either making this as a irregular flat correction like an A. This is the first scenario. I should move B and C. This is one of the possibilities. The other possibility is that it's moving higher. Either it can move like this, right? This is called a wedge pattern or ending diagonal, or else it's moving as an impulse. But this is just a higher time frame outlook we have. Let's go down to a smaller time frame now. What did I tell you in the time cycles video? I told you something very, very important of time cycles video of 2024. I told you that 9th to 11th, 9th to 11th or 9th to 12th, your September is a very important zone. Here market can make a important high if the cycle is normal. If the cycle is normal. Now, what is a normal cycle? What is an inverted cycle? It's very simple concept. Normal cycle means you are expecting some high to be made, right? So right now we're expecting high to be made between your 9th to 12th September. So this is the normal cycle. Same time zone. What if the market makes the exact opposite move? What if market makes the exact opposite move in that time zone? This is called an inverted cycle. Inversion. Exact opposite happens, but time zone is same. This is one of the tricks of times, is what I call it. You cannot predict this in advance. If it happens, it happens. All right. Now, what do we have next? We have 18th, one of the dates which I shared long, long back. If you can check my tweets, and if you're connected with me on Twitter, you know that I have also posted this time zone, intraday time zone of 18 September, 1:45 to 3 p.m. Now, this is a bigger time zone. So this is actually not an intraday. This is a weekly time zone of Nifty chart. This weekly time zones, I always share it with the underground traders group. It's only there. So if you want to join the underground traders group, do ping me on WhatsApp. I'll let you know the details. Right now, it's very simple. Structure wise, what are we expecting from this point? Sharp rally and consolidation, correct? Sharp rally and some consolidation is going on. So by default, what did I teach you in the Elliot Wave Master Course? I've told you that when there's a move in the market, right? When there's a move in the market, which is a trending move, after that, if you see a consolidation, there's a very high probability that there will be one more spike in the same direction of the previous move. Okay. When the consolidation gets over, there's a high probability that there will be one more spike in the same direction of the previous move, same direction. So if this is bullish, right, this up next move after the consolidation is also expected to be bullish. But now question is, how far can it go? How much can we expect it? Right now it is very difficult to say how much, but we can plan for something called the pullback. So if this consolidation continues in two steps, it can move slightly higher like this, as an A wave, B, C, D, E, and finish something called an ending diagonal, and it can fall. This is one of the possibilities. The next possibility is that it is not making an ending diagonal. It is still in some consolidation. If this is your wave A, this is B point A or wave B. This is not a C yet, so you can take this as a B point A, and B point B is going on some complex correction. By the end of the day, we should know what is going on. But overall idea, I'll tell you, A, B, and C. If it comes like this or it goes like this, does not matter. Like this, let me show you. This is a complex correction. This is what happens when your operators or people, those who we call operators, are spending a lot of time in wasting the uh, decay, capturing a lot of decay, or waiting before a big event to come. So all this happens. It's kind of common. All the advanced concept members, I think this should be very clear to you. You have to think in multiple probabilities. Only then you will be able to catch this kind of move. So A in a complex, B here, sharp uprise as C, and then you will go down for the last. This is your B wave, last leg SC, and then sharp move up again by, because this is a consolidation. So overall picture I'm painting for you right now. This is one probability. We can consolidate further throughout the day, and then later on tomorrow or day after we can see a continuation on top, at least 25,470, 550 approximately. We can go there. So right now, for sure, that one move is going to come on the upside if it comes before this time zone. If it comes before this time zone, right? And then after the time zone it falls, what should be the target in case there's a falling fall comes, and in case there is a sharp fall in the market, what can we do? The first target on the downside, I've always taught you guys, is to mark 38 to 50% zone. Okay, mark your 38 to 50% zone. This approximately comes around 25,155 to 25,220, right? Rough figures, ballpark figures. Round figure, you can take 25,200. So in case there's a sharp fall, in any case there's a sharp fall, then we can expect 25,200 to come. Now I've made a strategy for this. I'll make a strategy video separately. Right now I've booked 7,300 using a capital of approximately 5 to 6 lakhs. So that's 1%. I'll make another video right now and I'll explain it for the weekly strategy, what I've deployed here and why. All that will be explained with timestamps and from last Friday or Monday onwards, everything. Okay. So right now, let's look at some traps. I've told you that I'll look for a trap if there's a trap available before the CPI. The first trap I see here is on the lower end. I'll just mark it here. This is one trap I see. Now, what chart is this? We'll discuss that probably in another segment. This is it'll take a lot of time to explain this. It's a volume analysis. There's a small playlist I have shown where I've done deeper volume analysis during expiry day, and check out the playlist if you're interested. Let me know in that playlist. Just let me know in the comments that you want to learn volume analysis. So what I do, this is not textbook material, what I do, and this is not available in any textbook because I'm doing my own research. The next trap zone I see is on top. Second, yeah, this is another trap zone here. Okay, this entire thing is one trap zone. So right now, both sides on the top and bottom, we are seeing a trap zone. So let me just, yeah. You see the candlestick chart, both sides is the trap zone. What market usually does is there's something called double trapping, which I refer to it in my own research, is that the first trap when they set anywhere, I've shown this, I've posted this trap zone in the live market for those who are following me on Twitter. I'll just link the post to you guys. You can watch it or put the screenshot. What happened here? Very simple. When the first trap was set, it came back to refer to this level and did not break. So now who is doing this trapping? Is it algo or is it operators, human beings? It's definitely algo. Humans cannot do this kind of trapping. And then what happened? They created another set of traps. So what exactly is happening? If the market is going down, there is sellers who are getting trapped. On top, buyers are getting trapped. So what exactly is the market doing? It's chopping a lot of people here, a lot of retailers. It's chopping them. We have seen last time, and during the expiry of Nifty, this was the blasting move in the market. It was a very same, very similar situation to what's happening right now. There was a both sides trap was set, right? Both sides trap was there, and one side got triggered. That's possible this week also, but knowing the nature of the move which can come right now, we know there is one move on top which is expected, one spike up, and then it can fall down. So this double trapping which I'm talking about is this, that once they set a trap, they'll go down without changing the trend. Without changing the trend, what they'll do is they will give a spike higher to show that yes, the move is bullish, range breakout, so and so, and then sudden fall comes. This usually happens where in your wave one, wave two is over, wave three, wave four. So this is your wave four, wave three, then wave five comes, right? So this is where the last leg comes. And this is again a lot of detail, guys. I'll discuss this in another video. So right now, I hope you understand, you have a picture what to expect in the market, and let me know if you want these morning videos so I can make them for you, where we'll discuss the view of the market beforehand in the daytime itself, before the market starts, not the post market analysis. Okay, so thank you, guys. I'll see you in another video. I hope this video is helpful, and please be safe. If you want to follow me on Twitter, I'll put the link down in the description, where I'll be sharing some live levels or intraday time zones or something like that. Thank you, guys. I'll see you in another video. Be safe.